Is a massive sell-off in the price of gold just around the corner? In this video, I show you some technical signs that indicate we may be in for big trouble when it comes to the price of gold and the forecast for the next 6 to 12 months. This will be really important if you're invested in gold or other precious metals. So let's get straight to the charts. By the way, if you want to make sure you're getting these regular gold price updates, please consider subscribing to my channel. We hit a major high in the price of gold back on the 6th of August 2020. And we were over the $2,000 mark then. Since then, price has been slowly grinding lower, and you can see here lower highs and consistent downward pressure on the price. Almost what you could describe as, I'm just going to draw a horizontal line here. One thing you have to watch out for in classical patterns is this, a descending triangle. That seems to be what could be forming now. And that's something you have to be careful about, and I'm going to show you why in just a minute, because we're going to compare to what happened with the price of gold and the stock market in the 2008-2009 crash, and then going on to the peaks we saw in the price of gold back in 2011. So we're seeing these lower highs, but the first thing you have to consider here, just zooming out, is this normal, healthy correction? Because as we move up in the price of any asset, it's normal to get a period of correction and then we continue the prevailing trend, which was this impulse move up. So we're just getting a period of correction now, a pause whilst the price is basing and finding support before we begin our next leg up, a next leg to follow. It's absolutely possible. A few issues I have with this. First of all, let's discuss the general environment, economy at the moment, and the narrative. Now, what do we know from the price of gold? Now, we can't just guess and say, oh, look, there's money printing going on all over the place, and that's why gold is definitely going to go up, and that's the end of the story. It just doesn't work that way. Just look back at history over the past 20 years. That does not alone matter when it comes to the price of gold. If it did, then gold would not have had those years when it was moving down. Yes, overall, gold has gone up consistently over, say, a 100-year period, but so have many different assets, including the price of a house, for example, and the stock market. The other thing you have to remember is when there is panic and uncertainty, gold is definitely still considered a safe haven. However, it does not provide you with any kind of a return apart from capital appreciation more than anything else and a flight to safety. First, we had one news of a vaccine from one company, and as I've mentioned in my recent video, I'm pretty sure in 2 or 3 months time you're gonna get a choice of different vaccines, the same way you get a choice of different types of soft drink when you go to a supermarket. And the central banks don't seem particularly fussed about their current policies at the moment. What is my point? My point is there isn't a massive amount of pressure or worry right now, despite the fact that maybe a quarter or half of the world are in different types of lockdown. That's important to note here. But more importantly than that, let's have a look at the technical analysis, and let's go back to 08-09. What I've done here is I've added the chart of the S&P 500. So the gold chart is there in black, and in this dark orange red color is the S&P 500. Now, if we look back at what happened in 2008-2009, you'll see something very, very interesting. So you can see here the price of gold bottomed out around October 2008. But the stock market actually bottomed out a little bit later, so around March 2009. But then we actually saw both rally upwards in the recovery phase. We saw the stock market move up, albeit with corrections along the way, and we saw the price of gold rally significantly, whilst there were still a lot of concerns, a lot of worries. If you remember then, central banks were in chaos trying to work out what to do. They were pushing down interest rates as fast as they could, and there was all of this quantitative easing. But then gold hit a peak price in September 2011, and then for 5 years afterwards entered a massive bear market where it eventually bottomed. But if you look very closely here, have a look at this. This is off the highs, the initial technical pattern we saw. We saw an impulse move down, a lower high, yet a lower high, and then a third equal or lower high, and then we reach support here. So we hit this kind of support level here, which I'll show you on the main chart in just a minute. 1, 2, 3, and then the fourth time we bounced another lower high, and then we just fell through and the price broke down. That was the pattern we saw there. But what I want to do now is compare that pattern to what we're seeing at the moment. I'm just going to remove the S&P 500 chart, and I'm actually here on a 2-day chart here so you can see both price moves. And what you can see is this is a very, very important level. Where we're at support at the moment, the 1850 level, which was strong resistance back then in 2011. That potentially could be support now. However, will that hold as support? That's the key. And what I've done here is I've taken that exact pattern from 2011 and we're going to compare that to what we're seeing at the moment. So this was over a much bigger time frame. However, on a shorter time frame, are we seeing the same thing? And my concern for gold is recently, as the stock market has been moving back up to all-time highs, gold has not been following. Although earlier on in the year, throughout summer, both were going in the same direction. So this is the pattern from 2011, and you have to say, it looks remarkably similar to what we're seeing in gold at the moment. So what is the structure at play then if this was to break down as we saw back in 2011 going into 2012? Well, if this is to play out, then this breakdown could be imminent. And imminent meaning literally within the next few trading days, this week or next week, we could get a retest of the 1850, and then this could break down, retest again on the other side, and then we could get watershed selling. That is absolutely possible. In terms of structure, the clue for me is in this area here, where we saw the price move up. However, the price seemed very, very corrective, and then we had a sharp impulse move down. So what does that mean? In terms of the overall structure, the way I'm looking at the move in gold, and very similar in silver, and I'll do an update on silver very soon as well, is I think this could have been a massive first wave down, so a 1, and this is a 3-wave move into a 2, and we're just beginning a 3rd wave. Now, if this is the case, if this is what's going on, that's what I mean by watershed selling, because 3rd wave tends to be the strongest one down. I'm not saying this is definitely going to happen, I'm just saying, in my opinion, the probability seems more and more likely that this is what could happen. And if you look at the price action since August, the strongest moves, we've seen very strong impulses in the downward direction every time, but the reaction to price moving up has been corrective. Corrective meaning a lot of overlap, which is very different to what we were seeing when we were moving up here. But could it be different this time? Well, in that scenario, we really need to hold this support level, I think, now, because this was resistance last time. And the other thing in terms of the environment and the economy, we need some sort of big boost and catalyst for gold. And to be honest, I just don't see where that's going to come in the short term. You can see in articles like this one, here's how gold could hit $5,000 in 2021. What they do is they reference the economic meltdown and a weakening dollar. We know that at the moment. We know the dollar's weak, and we're in lockdowns in many countries in the world right now as we speak, with a whole set of vaccines on the way. It says here Wall Street giants, most recently UBS, are telling clients to flee the markets and buy up gold. Trump, for all his love of gold, is spurring the precious metal on by pumping the fear index further, with suggestions that his defeat might be the result of a fraudulent vote. I think we have a bit longer to go at the moment with the stock market, the housing bubble, and now is not the time for people to be chasing gold. I think that time will come, but the markets are, of course, a question of timing. So let me know what you think in the comment section below, and I'll do another update very soon. Thanks for listening.